thanks a lot. You heard Ross outline the Lumina Group and the history of the group. I've been with Ross since 2004 through all the copper companies and all the current companies. And today I want to take some time to talk about what the Lumina Group is up to. We've got a discovery story in Luminex. Ross talked a little bit about the undervalued nature of Luminex. We have projects at Condor, Pegasus, Cascas, and Tarqui. And actually, we've advanced Condor to the point where we're starting to look at engineering within Luminex. It's a 5 million ounce gold resource that we have, and we're moving along. We're drilling there currently. And then we're also advancing strategic resources, which we have our Mustavara project in Finland. It's a vanadium project, and it's kind of grid storage battery plus the steel market for rebar and that sort of stuff. So we're advancing that as well. And as Ross said, we're looking to monetize Lumina Gold in our Cangrejos project. We just put out a PEA earlier this year, so I'll kind of walk you through some of this. This is kind of the track record and the background of the Lumina Group. We raised about 275 million and returned about 1.6 billion to investors. Anfield Gold was the company that I was CEO of that was rolled into Equinox when we did a three-way merger between Equinox, Trek, and Newcastle. And so I'm going to talk primarily here initially about Lumina Gold. We're advancing the largest primary gold deposit in Ecuador, the Cangrejos project. It's the only asset in the company. Going to do some forward-looking statements here. And let's just get right into Cangrejos. Cangrejos is the 15th top gold development project of all developers with projects over 250,000 ounces of year production capability. It's the largest primary gold deposit in Ecuador, about 10.4 million ounces of indicated, 1.4 billion pounds of copper. Inferred gold is about 6.7. So that's about 17 million ounces, as Ross mentioned earlier, about 2.2 billion pounds of copper. In 2020, we just put out a PEA, and basically it's got a 25-year mine life with a 366,000 ounces gold produced a year. Low cost, I'll get into why here in a little bit. $604 an ounce AISC net of copper. Robust economics at $1,400 gold. It's $1.6 billion NPV at a 5% discount rate. And if you move gold up 20%, that gives you a 2.5 billion NPV at a 5% discount rate. So real robust economics to upside in gold is what the PEA demonstrated. Excellent infrastructure around the project. And we spent the last 6 years de-risking and advancing the project to the point where, as Ross mentioned, we're ready for somebody to take it on and build it. So the reasons to buy Lumina Gold, we see a real value disconnect in the market right now, and it's an investment opportunity. Basically, if you look at the first resource we put out in January of 2017, we had 4 million ounces of gold. We updated the resource in 2017 and 18. And then in 2019, we upped it again. And, if we look at it today in November when we put the resource out, the resource has gone up over 4 times. The gold price has gone up about 60% since then. And our share price has only gone up about 32%, including the financings we've done. So there's some disconnects in the market. Developers haven't moved as well. Junior developers as some of the producers. There's some Ecuador risk, but it's a real substantial investment opportunity in Lumina Gold right now. So if we look at the company, we've got 332 million shares issued and outstanding. We don't have warrant overhang. We have some options for management. Market cap 283 million. We have about 1.9 million in cash at the end of June. We've got buy ratings by Haywood, Raymond James, and Fundamental Research. Haywood at $2. Ross, like we mentioned earlier, has 19.8% of the company. An Ecuadorian entrepreneurial group has 18.6%. Management of the board has 9.8%. And then we also have Route One, who's a diversified investment fund out of San Francisco that has a major share as well. The things that Cangrejos really has going for it is its infrastructure. We're 40 miles from Puerto Boulevard, or 40 kilometers, sorry. And that's where the Mirador mine is shipping its concentrates from. There's a regional airport at Santa Rosa. We have paved roads within about 8 kilometers of the site. There's power. The national grid's the site, a lot of hydro power. We've got ample water to take the project initially from 40,000 tons a day to 80. It's low elevation by Andean standards, and we have good supportive communities that are about 7 kilometers away. Nobody living on top of the deposit. So all those things bode well for the company. Also, cheap diesel power in the country. Ecuador is a producer of oil. All of these things help the economics of the project. We get a lot of questions about Cangrejos. Does it have scale? Yeah, it's the 37th largest primary gold asset by resource in the world. That's all stages: exploration, development, production. It's 14th largest undeveloped primary gold deposit by production capacity. What about the grade? Yeah, it is a low grade, large scale, but you got to think of this more as a large copper porphyry sort of project than a traditional gold project. So if you look at it from a copper equivalent basis, it's on par with Cobre de Panama, Mount Milligan, and Red Chris. These have all been constructed lately. We get asked about the CapEx. It's about $1 billion US deployed in Ecuador. You've got recent history of projects like Fruta del Norte and Mirador that have financed internationally, deployed the capital, permitted constructed, and commissioned these projects. Both those projects went into production at the end of 2019, and they continue to operate today. And then we get asked how advanced the project is. Large portions of Cangrejos are done at PFS level. We elected to do an updated PEA because we have this satellite deposit, Gran Bestia, that came in, and we're able to incorporate it in the mine plan and understand the overall structure of it. And, that's kind of where the project sits today. The project isn't very sensitive to higher cutoff grade. So our base case resource for indicated resources was 0.3 grams per ton gold equivalent. And that gave us the 10.4 million ounces of gold. But if you raise that cutoff grade to say 0.6, you still have about 8 million ounces of gold. So it's a porphyry gold deposit, gold copper, homogeneous, not that sensitive to cutoff grade. So that bodes well for development and production as well. Here we're looking at, on the bottom right, the Cangrejos deposit. And on the left is the Gran Bestia deposit. They're about 1 kilometer away from each other. The majority of Cangrejos is drilled to indicated. A lot of the engineering work has been done to pre-feas level. And Gran Bestia is a little bit behind it. We don't have it quite drilled to enough to indicate it, and we haven't done as much metallurgy. But at a PEA level, we understand the impacts and the overall value that Gran Bestia brings to the project and the company. So here's a cross section of it. The dark blue bottom line is the current resource pit, and on the right is the Cangrejos deposit. On the left is Gran Bestia. If you look at the gray line there, that was the 2017 resource pit that the original PEA was done on. The project's open on Gran Bestia to the north and the west, and Cangrejos is open to the southwest and at depth. Look at some of the metrics of the project. Life of mine, it'll average 366,000 ounces of gold a year and 46 million pounds of copper. It's got low cash operating cost. The AISC is 604 net of copper. C1 cost are 550 roughly. $1 billion initial capital cost to build 40,000 tons per day. Using cash flow to expand it in year 6 to 80,000 is another 450 million. And we already talked about the metrics and economics. So if you look at the base case with the project at $1,400 gold, we're looking at the 1.5 billion NPV, and that's a 16.2% IRR. And if you jump it up to 1680, the IRR goes up to 21.7. So, where's this thing ranked? There's only 32 active primary gold deposits in the world that can be developed, that can produce over 250,000 ounces a year. The blue ones on this presentation are held by majors or mid-tiers, and then the yellow ones and Congrejos in green here are held by independent developers. So it's the fifth largest held by independent developers. So pretty significant project. When we talk about the Ecuador discount, when I was talking about the share price, what we see if you look at Western world developers and you look at a PNAV multiple basis, the Western world developers are trading at about a 0.58. And you look at the group of the Ecuadorian ones, they're trading about 0.37. So as Ecuador improves and projects like Fruta and Mirador continue to be successful and more development projects move down the scale towards production, we expect this to pick up. So this is playing into the discount. There's a valuation gap there, and we hope that closes in the near term as Ecuador improves. Just kind of looking at the scale of this, if you look at that same group of a lot of our peers, we trade well below the development peers on a gold basis, gold equivalent basis in the ground. The average peer is about $90 per ounce of gold, and we're at about 11 or 12. And you can see the scale of the project. There's over 20 million equivalent ounces. So since we completed the PEA in 2018, we have showed that the project is potentially profitable at $1,300 gold. We've done a lot of work to advance it. We talked about the 2020 PEA demonstrating a 1.6 billion NPV and a 25-year mine life. And we've got a group that's been together a long time that's had successful record of advancing and monetizing these assets. So I'm going to skip over to Luminex right now in the next 5 minutes I have here and talk about our progress there. So we're spending our money primarily focused on the Condor project, the 5.2 million ounces of gold there. And that includes the new discovery at the Camp Zone, which is an underground target about 3 grams per ton. We have JVs with Tarkey at our Tarkey project with BHP. They have to spend roughly $82 million over 6 years to earn 70% of the project. And then also with Anglo, they have to spend 57.3 million over 7 years to earn 60%. They can earn an additional 10% if they take us to a production decision. Similar ownership structure. Ross is at 19%. We're market cap right now is 74 million. We have 12 million cash. That's mainly going into Condor and Cascas. This is the trend along the Camp Zone at the Condor project. And basically we have a trend that goes about 5 kilometers that we're working our way along. The Los Cuyas, the Soledad, and the Enma projects are open pit. Camp Zone would be underground. And we're working to define a development project that hopefully will move to a PEA next year that combines those deposits. The other major discovery that we just press released is at our Cascas project. Cascas is a really large porphyry, gold copper porphyry system. You can see in the figure at the bottom left, the gold anomaly. The Shakai is the new deposit that we've identified that we just put the press release on. And north of that is another copper anomaly with 400 ppm copper in soils. We hope to be drilling sort of the end of this year, very end, early next year. We're doing a lot of work to get into the area. We're still doing a lot of exploration development work where we get our roads and to support drilling in place. And the thing that's real exciting about this, if you'll see the figure on the left, it's in this probably the most highly mineralized trend within Ecuador. where you have Warintza deposit to the north of Solaris. We have our Tarqui deposit. You have Kimi in between Tarqui and Mirador, which we own 100% of. You've got the Mirador mine that's in production. South of that's Fruta del Norte, which is contiguous with our Condor project. We have the Condor northern area, which I talked about the development plan, but there's also the Santa Barbara deposit, which is a gold copper porphyry that's in our resource. And then south of that is Cascas, and south of that is Provenir, which is SolGold's recent discovery. So we're in a really highly mineralized area and a lot of upside potential, and hopefully Cascas will turn into a major porphyry copper discovery. So here's looking a little bit at the Chakai Creek. We've done geophysics over the area, and that's how we found it. There's a lot of stockwork, pyrite chalcocite veins at the surface, a lot of covalite, a lot of these secondary copper minerals, which we believe we may have an enrichment zone there. We'll find that out when we drill it. But some of these pictures you can see heavily mineralized copper, oxides, sulfides, and we're really excited about this target. So, this is kind of the things that we're focusing our money on. We hope that BHP and Anglo early next year will be drilling. They had planned to drill by now, but with COVID, it slowed them down a bit. We've been able to continue to drill at Condor. So, this is just real briefly, this is looking at the Anglo targets and the BHP targets where they are. So we're all in good areas. Anglo is up in the north central part of the country. It's our largest, Pegasus is our largest concession. It's some 65,000 hectares. They've identified 8 porphyry copper potential areas, and the Medusa target, if you look at our deck after this, that's where they plan to drill initially. Tarqui is a little bit different story in that it's our highest grade copper deposit discovery to date, and BHP plans to be drilling that. So, next year we could have 4, possibly Cascas, Condor, Tarqui, and Pegasus, where we have drill bits running. So we're real excited about the future. So that basically wraps up what I have to say today. Thanks for your time and interest. Thank you to Red Cloud for hosting us, and good luck to everybody out there in COVID. And we're looking for strong gold and copper prices in the future. Thank you.
Thank you very much, Marshall. You took it right down to the wire. Very good presentation, and then an update on exactly what's going on. For those interested in moving on to the next presentation, please do so. It's Brixton, and it's a good name to be looking at. Marshall, just a couple of questions. Is the discussion about Cangrejo and potential divestiture, is that really just because it's a big project that needs to move into larger hands?
Well, it's really the strategy and the business plan of all these Lumina stories from the beginning. This is the same strategy we employed with Lumina Copper, where we take large assets, de-risk them, advance them down the engineering pathway, and exit to build them. And, these are billion-dollar plus sort of development projects. And, a junior developer company like our group could potentially take something like this on and build it. But really, it's really the strategy and the business plan to move it on to a larger company that can take the asset forward. And then we move on to our other portfolio companies like Luminex and focus on those.
All right, that's good clarity on the strategy and the consistency of the strategy. With the stable of companies. Look, Luminex looks like it's got some really good drill prospects over the next 12 months. I'm sure everybody that's still here are looking at it and are going to be watching in earnest with results coming out. I certainly look forward to seeing how Chakai develops once you get a rig on that property. And thank you very much for giving us this rundown on both Lumina Gold and Luminex Resources.
Yeah, it's a lot to cover in a short period of time, but appreciate the time and the interest.